Hello, class. This is going to be a review for the final exam. And so definitely do watch this. It's going to help you with the final. Let's kind of just generally speak about the class, commodity hedging, master's class in commodity hedging. I hope you enjoyed the class. I apologize, or I would say that the 8 weeks to learn commodity hedging is a climb. With the help of Shelley Nattenberg, with the understanding of derivatives, which is a complicated subject. I've taught derivatives most of my life, and to teach derivatives and use of derivatives for hedging, we can cram as many things into this class as possible and making sure that you're actually learning. I mean, my attitude is that if I pour too much into a class, at the end, you might memorize, but you're not going to learn. And memorizing is not learning. And so what I tried to do was keep the class as basic as I could to give you the concepts of commodity hedging. But this is not the end. This is not the beginning, but this is the end of the beginning. Let's put it that way, a famous quote by Winston Churchill. So let's kind of jump into, I'm looking at the final exam right now, and so definitely watch this. It's going to help you with the final. Let's just talk generally about commodities. They are affected by supply and demand. Okay, understand that. Most definitely a commodity is supply and demand driven. Absolutely. Commodities can be correlated. They cannot be correlated. Just understand that. And commodities are driven by economics. So I think that's a known, that's a given. So, just kind of take that for what I'm saying at this point. When we think about how commodities can be affected by supply and demand or not affected by supply and demand, there's elastic or inelastic. And what does elastic or inelastic mean? Understand what happened during COVID. Was COVID more of a demand, quality driven, or supply demand? What was going on during COVID, especially April of 2020? Kind of look into that. What happened in the futures market during 2020? Something happened in the futures market that's never happened before. And I think that's important to look at that. And what was the structure of the market during the COVID, the lows in April? And I think that's important to look at that. Understand the faces of delta. That's important. And what are the four faces of delta? We've talked about that, so I think that's important to know. Why do companies hedge? What are they really trying to do? What is their bottom line on that? You want to understand what are the factors that drive volatility? And that really has to do with GARSH, General Auto Regression Heteroscedasticity, used in Doppler in predicting the weather. And what are those factors that is similar? What is volatility in weather similar to? I think that's important when you're reviewing. When you buy an option, understand how it's priced. Is it priced off the spot, like in the equity market, or is it priced off the future? And I think that's going to help you with some questions. Okay, a lot of kids get that wrong. What is the difference between a future and an option? I think that's important. What is implied volatility in one word? If I was going to explain implied volatility, what would it be in one word? What does it mean when a delta is at a particular price? Why would somebody that's a downstream, why would they maybe use an option over maybe a future? And vice versa, upstream, downstream. Why are they going to use a call? Why are they going to use a put? When are they going to use a call? When are they going to use a put? Understanding downstream and understanding the relationship between delta and upstream and downstream. How does delta and gamma relate? When you put on a hedge, what do you want the gamma to be? If you're long, let's say you're upstream. How to adjust a call if you're in a structured combination of options. Understanding notional value, I think that's important, and how delta affects notional value. When is a good time to use some of the structures? What's the difference between a future and a forward? What affects an options price? I think that's important. You're going to want to know that. What does it mean when the markets tend to change the margin requirements or lax margin requirements? What do we call that? Understand the basis of a swaption. What is the difference between upstream and downstream and how the hedges would change? I think that's important. Understanding notional value, as I said before. Understanding what minimum variance hedge ratio is, as talked about in class. When am I going to, if I'm upstream, what are some structures that I could look at? When is it time to use zero cost collar or three-way collar? I think that's important. If I'm in steep contango or backwardation and I'm buying options to hedge, how does the deltas, what kind of deltas are you buying in a backwardation and contango based on being upstream or downstream? I think that's important. Understanding cross-asset hedging and why we look at assets that have relatively high correlation. Why would you diversify a hedge? And why do we use the 1/3 strategy, putting yourself in a winning position? These are overviews. I think if you kind of hone in on what I just said, I think you're going to do fine on the final. As I said, students, my goal as an adjunct and as a practitioner, my biggest reason why I do this, and it's not for the money, it's really trying to get the young people to really do things right. I mean, what we've seen in this class is a lot of very professional sort of hot shots. Are you lucky or good? Some of these hedgers get lucky and then they become famous and then they're not really good, because throughout the class we've seen some really bad implication of hedges, and we talked about maybe how they could have thought about it in a more holistic way. Remember, the basis of a hedge is to be indifferent about markets. If we don't care which way the market moves, then we can take that off the variable side of the balance sheet and we can put it on the fixed side of the balance sheet. That's why swaps are the most popular thing, because swaps just zero out our risk. They just take our risk away. Of course, there's problems. It's over the counter. It's hard to get out of. And it caps, you don't get any capital appreciation if you're upstream. You don't get any benefit from prices falling if you're downstream. So understanding that this class was an introduction to commodity hedging. I think it's one of the few classes other than the Ivy Leagues that actually teach a class in commodity hedging. So it's very unique. It's not really taught at the academic level. If any of the students are working in the industry and get into and work for a big bank that hedges, this is a good primer. This is a decent primer. It's absolutely not holistic. Didn't really get much into calendar or time spreads. We didn't get into diagonal, especially on the back spreads. We talked about the diagonal back spreads where you mismatch the dates to try to bring it into the credit. But we didn't really talk about calendars. But calendars are used a lot of trading, a lot of prop trading. And if you're taking the next semester in trading commodities, probably the professor will go into a lot of things like time spreads or calendar spreads and strategies to get alpha as a trader. This was not that. I really tried to stay away from anything that we're talking about how you can make money in the commodities market, to how you can just protect your price more from a user or a producer, not looking to make money, not a strategy. A lot of friends of mine trade commodities to make money. But that's not what this class is about. This class is more defined to say, I need to protect. I need to protect my prices, upstream or downstream. I want to thank you for taking the class. If you have any questions before the final, the TA is, I know, going to have a Zoom review and ask more holistic. You might want to watch this and then, sit in with the TA and kind of go through in more detail some of the things I just talked about. So listen, class, good luck on the final and good luck in your career and your journey. Unfortunately, it was nice to meet you virtually. I miss the days when I could down on campus and spend 16 weeks in front of the students, getting to know them and really getting deep into Q&A, which Unfortunately, you can't do in the online classes, but it's a new world. It's a new world, and I guess that's the world we're living in now. So good luck to everybody. I really wish you the best. Thank you.